A little bit of digging actually revealed huge plans by Palantir's management expecting their stock to reach $180. Now, you heard me right, and this is in their official earnings report that just came out, so let me show you. So, looking at the kryptonite some say threatens Palantir, stock-based compensation. Now, that's a whole other conversation on what you think is appropriate, like it or hate it or whatever, but we get some interesting target points, especially around their SARs or stock appreciation rights. Now, as the name implies, these awards are based on how well the stock does, so that the employees who vest these over time have alignment with shareholders like us to appreciate the stock, usually through doing a good job and creating value for the company, that in turn rewards shareholders and themselves at the same time. Now, looking specifically at the stock appreciation rights outstanding, beginning at the end of the year of 2023, they had almost 51.5 million shares granted as of quarter three, but looks like some folks left a little bit earlier, and around 3.5 million of these have been forfeited, so Palantir is still on the hook for around 48 million of these. And the weighted average exercise price is around $50. Now, this is actually an increase from last quarter, which respectively had 46 million shares granted with 43 million remaining. So you'll see what those extra 5 million shares are from. And dollars at least from September 30th, 2024, so quarter three, the current impact is around $176.5 million, but $120 million of unrecognized expense would be accelerated if the market conditions related to the market vesting SARs is achieved earlier than its derived service period. And honestly, it looks like this is the case when they immediately hit these price targets around this week after earnings. So as a refresher first, after the market vesting SAR satisfied the condition of exceeding $50 within an open trading window, so technically measured based on the closing price on the immediate prior trading day, then these can be utilized by employees who have some vested shares to offload. Note though, there is only a $20 maximum appreciation, so just getting above $50 is not enough. If some are really holding on, they may wait for $70 and above because that means they can maximize the value themselves, getting at least the $70 for all the shares that they can get at $50. But do remember this is vesting time period too, so you can't just offload everything for what they're worth if they're not yours already to sell. So at least there's the time aspect controlling the offloading of these from happening all at once if we were to hit $70 very quickly. Now, everyone is wondering about the $180. Well, it's here, the time vesting stock appreciation rights, and these are actually new. These are vesting over a 9-year period, so Palantir calculated there is a reasonable chance for folks to take advantage of these time vesting SARs. First, between the $39 to $70 range, which they clearly are already in. But with such a very long vesting period, I believe most folks don't have many of these percentage-wise vested already ready for selling. Plus, the max appreciation values are between $60 and $180. So I'd say, at least from the numbers given here, the minimums and maximums, there's a sliding scale in between, but the very least is someone can profit between 39 and 60, probably for way later dates of vesting. Now, some would say this is crazy, but over 9 years hitting or exceeding $180 doesn't seem so far actually into the future if Palantir can continue to deliver and expand, and as the market is implying with these multiples. Now, without further dilution, of course, $180 at the current float today, very rough estimation, will be close to $400 billion of market cap for Palantir. And just quickly imagining what that could look like for Palantir would probably be them making tens of billions of dollars in revenue at the very least at elevated multiples, and they'll be making billions in GAAP net income at that point, I would assume. It seems like it could be a faraway dream, but when you observe a company quarter over quarter, it seems slow, but at least in management's eyes too, this is a possibility, hence the $180 appreciation maximum, but of course none of this is guaranteed. And they show their methodology, of course, but I think the best part of all this is explicit statements that the company has never paid and has no plans to pay dividends on its common stock, which came into the calculation as well. Now, I love to get this confirmation here personally as someone expecting this stock to be treated as a growth one. So piling in their cash, not for distribution and getting taxed on it, but for reinvestment back into the company for growth is favorable in my opinion. But it still doesn't mean they'll never pay a dividend, of course, farther into the future, because the warning here is no plans. And obviously that warning is not binding since plans can change. But regardless, it seems at least over a 9-year period, the sentiment is that dividends are a no-go or at least very, very unlikely, which I personally like to celebrate. So, what are my 2 cents though on these stock appreciation rights here that we discussed? I honestly like the way Palantir has them planned out, and it looks like they're honing this in even more. So, for those who have worked with companies that award shares, if they're public, there are a multitude of ways for them to try to motivate employees. And of course, not all of them are dollar wise. But with your performance being a big part of staying at the company, hitting goals and et cetera, like that, in order to accumulate time vesting and therefore actually having the chance to exercise options, hopefully way above your strike price, or sell RSUs when they give you shares. The concept is basically if you feel like you're an owner of the company, you have a vested interest beyond just collecting a paycheck, therefore really feeling the need to maximize your compensation and hopefully your performance truly by the company stock in the end as well, where it trickles down. And yes, this is technically risky for that individual because if they, for example, took a lower paycheck because they expect their stock based compensation, then there's a possibility they can't take full advantage, therefore foregoing any other better paying opportunities that could hurt them. But there's also the other end of the spectrum where everything goes right and you get compensated much more. That's the risk that you just have to calculate. But from a shareholder perspective outside of the company, I'm all for motivating employees like this, especially when there is a max on what level of appreciation they can take advantage of. First, strategically, it creates a time aspect of urgency within a reasonable amount of time, I hope, not like decades where it's so far off where nobody really cares. And it limits exposure for Palantir getting sell pressure all at the same time. Because, for example, the time-based awards seem to be a sliding scale, meaning at different max appreciation points, there's only a certain amount of shares that can be sold off that even makes sense for employees to do so. Now, the first original batch is already set up for only $50 to $70, so it can happen all at once, but the vesting schedule still controls that, making it impossible essentially for all this to be taken advantage of all at once by the market. So if we get further compensation through SARs, then time-based awards will probably expand further in my opinion, because it combines both market conditions and more timing and allows more control by management who, after seeing the stock's performance right after earnings, meaning they have data technically to slide this to even higher prices further. This amount of control can be taken on now since the proof is in the pudding that they are a growing company and prospective employees can at least see there are achievable goals, which clearly the first tranche of market-based ones have seen, probably seeing some more exercise over this quarter since they've officially hit that threshold, and if the price appreciates further or even remains around the $50 range, because anything above 50 now is profitable. But you can argue even further out the ideal scenario from a shareholder's perspective is I think Palantir's reputation could just speak for itself, maybe later on and just reduce this heavily or even eliminate these programs over time, but that's definitely not in the cards for the near future at least. But curious to know your thoughts on the stock appreciation rights, let me know below, and I'll see you in the next video.